Hello, everybody, and welcome to the weekend update for the week starting October 31st, Halloween. I hope everybody's had a great weekend, probably out partying a little bit for Halloween, I imagine. So hopefully everybody had fun. We got a lot to go over today. It's got a busy week coming up. We got lots of setups. Things are starting to look really interesting in this market. So let's get right into this. As you know, everything we do here is for educational purposes only, and we are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, why don't you go ahead and smash that like button so we can move on to look at our earnings this week. So we've got a lot going on. We're into the second tier companies now, right? There are something like 1,500 companies reporting this week. So chances are, a good chunk of your portfolio, your long-term portfolio, will be reporting this week. And we need to really be aware when we're looking for setups. We really need to be aware of when the earnings are coming. So all that being said, Monday, not really terribly interesting. Nothing catches my attention there. But on Tuesday morning, before the open, we've got SoFi and Uber. I know that both of those are going to be very closely watched. And I think there's still some members in the Discord who are still hanging on to SoFi. On Tuesday after the close, we've got AMD. That obviously will be very closely watched. We have Airbnb, and I think we should take a look at AMD a little bit later as we're going through things. Hopefully I don't forget to include that one. Airbnb, we were looking at a bit of a potential setup last week. Nothing really happened there. Thought it would break out. It didn't. It just sort of started to grind down, and now earnings are coming really close. So not much worth looking at there, I don't think. Unless you like this company, then obviously you're going to be watching its earnings. Devon's an energy company. It's got a nice little setup. It's right near all-time highs. Looks ready to break out. Of course, earnings are going to be important in that one. Wednesday before the open, CVS Health. I think a bunch of people watch that, but nothing else really before the open on Wednesday. And after the close on Wednesday, we have Roku. I know a lot of people watch that one. I know there's members in the Discord who still own that. Qualcomm, really important company, reporting Wednesday after the close. Marathon Oil, we have a position in Marathon Oil that we put on about a week and a half ago, I guess now. We'll take a look at that one. It's been it's been moving up, but the last couple of days not so great for it. And with earnings coming, we've got a decision to make. So we'll talk about that in a minute. Robinhood. This one is interesting. That's on our setups to watch list. But again, with earnings coming, we've got to be really careful. But I think that this could give us a play for after earnings. So we're going to take a look at that one later on today. Etsy's another one that I know people watch and could be quite interesting. On Thursday before the open, I think Royal Caribbean will be interesting. There's been some movement in these cruise lines and airlines. And then we've got Moderna. Right after that, Air. I don't even know what this. Never heard of this company, so not interesting to me. Anyway, Crocs. This could be interesting because Crocs is like, Crocs has sort of had a second life or a second wind, and I wonder if they're going to be able to continue that. I have noticed in some of the stores that there's all sorts of, they're coming up with all sorts of crazy products lately. And it seems like they're really trying to sort of keep this trend going. And I have my doubts. Oh, I forgot to highlight Peloton. I'm sure there's going to be people watching Peloton. And maybe even Nikola, the joke of a company. All right, so Thursday after the close, PayPal, obviously important. Coinbase, Square, maybe even Mercado Libre. Lots of, Thursday should be very interesting. And then Friday before the open, we have Fubo TV and DraftKings, which should be interesting. Okay, so, again, tons of stuff going on for earnings this week. On the macro front, On Monday, we have the Chicago PMI. Not terribly important, but these PMIs, these purchasing managers indexes or indices, are fairly important, and they're early looks, or they're digging deep into what causes inflation in an economy. So that does make them important. So the Monday Chicago PMI, not super important, but on Tuesday the ISM manufacturing PMI, much more closely watched, definitely more important. Also, JOLTS job openings on Tuesday. Now, we're all watching job openings because we're watching the Fed. And guess what we got on Wednesday? We have ADP non-farm payroll employment change, so another important jobs number on Wednesday morning. And then Wednesday afternoon, we have the FOMC statement, the rate announcement, and then half an hour after. So that's at 2 o'clock in the afternoon. Then half an hour after that at 2:30, we've got the Jay Powell press conference, and he'll be speaking for an hour or so. And there is often fireworks when he's speaking at this press conference. So that is the big thing. We've been waiting for a while now for this. We've been rallying into this because the market is expecting their language to soften. They're expecting a pivot. Now, they're not actually expecting it at this meeting. We are expecting a 70 basis point hike. Let's take a look at this. So we're looking at the CME FedWatch tool. Okay, and you can see for November 2nd, so our current rate is right up here. We're sitting at 300 to 325 basis points. And we are looking to move up at this next meeting to 375 to 400 basis points. So a 75 basis point rate hike is what we're expecting, 81% chance of that. I'm a little surprised that we're pricing in close to 20% probability of a 50 basis point rate hike. So when we get to 75, that could cause the market to come down a little bit. But I suspect that by Wednesday, this probability is going to be close to 100%. Now, what's going to be more interesting is their language coming out of this meeting. Are they going to be slightly dovish? Are they going to hint at a pivot? Are they going to hint at a lower rate hike at the December meeting? And let's take a look here what we're pricing in. So if you look at this, so let's assume that we go to 375 to 400 on this week's meeting. So in December, we are pricing in close to a 50% chance of a move to 425 to 450. So that would be a 50 basis point rate hike at December. Now, we have previously had pretty good odds that it was going to be a 75 basis point rate hike. Still more or less evenly split there. However, there is even, a slightly less than 10% probability that the hike would only be 25 basis points. This is a big change over the last few weeks. So it'll be interesting to watch, and we'll be watching this in the Discord after the rate announcement on Wednesday and see how this changes. So yeah, that's going to be very interesting. All right, let's go back over here. So that's Wednesday, big day on Wednesday. On Thursday, we have the ISM Services PMIs. Again, very closely watched, really important. We also have unemployment claims on Thursday as well. On Friday, another really important data point: non-farm payrolls. This caused last month. This caused some definite ripples through the market. We're wanting to see, the Fed is wanting to see the job market soften a little bit. Not too much. Again, we need to see Goldilocks print on this, but it would be nice to see a little bit of softening here. So that's coming up on Friday. So lots and lots going on this week. All right, let's take a look at the market. As always, we'll look at the major indices, some important commodities, some sectors, and we do have some nice setups that we'll be looking at as well. So let's start off with the SPY, the S&P 500. As you, I'm sure, are aware, you know, we had another really good week, up, I think it was 4% on the week. Really good day on Friday. And finished right up at this resistance level in around 389, 390. And we have that declining 100-day moving average right there as well. I'm not concerned at all that we stop there. I mean, this is nice. You know, if you look at these moves, right? You know, we've up, down, up, down, up, down, but it's starting to become more consistent to the upside here. And we had a nice 3-day run in here, consolidated for a couple of days. Another nice move up. I would not be surprised if we continue to move up on the way into this FOMC meeting. Now, you know, hopefully we don't move up too much, and we're going to find some resistance at this 400 level. That's an important psychological level, and it's just below our target from this head and shoulders reversal pattern, which is at around 404.5. So I think we spend the first bit of this week playing around up in this range. I don't think we pull back down into the lower part here. Let's see. Oh, we've got to now. I don't normally look at the Dow Jones Industrial Average. I think it's a stupid index. There's only 30 stocks in it. It's a price weighted index. So, you know, if there's a stock in there, like, you know, when I think Amazon is in it, you know, when Amazon was trading, you know, $2,000, well, they had the largest weighting in the thing just by virtue of the price of their stock. So that's silly to me, and to most people it seems silly. But the media loves this index. You know, retail traders who aren't super involved, or retail investors who aren't super involved in the markets love this index too. And you can see this has had a really, really strong move, and we are now above the 200-day moving average, first index to do that. So, you know, this is definitely worth mentioning, you know, and coming off this double bottom here, right, and that CPI day, it's just, you know, rock solid move up, and another really good day on Friday there. So, yeah, worth paying attention to. You know, I don't think worth playing. I think it's made a really big move, and it wouldn't surprise me if this had a bit of a rest. I think there are other plays that will probably play catch up to this. I think that we're going to see a slowing momentum in the Dow, and the other indices will catch up, and specifically IWM, which we'll look at in one sec. First, though, we should look at the Qs. The Qs are the softest of the indices, of course, as you know. Lots of mega cap tech earnings this week, and look, you know, I mean, if you were watching all these earnings this week come out, I mean, it was a slow motion train wreck. But when you look at this chart of the Qs, it's not really what you see. You know, we see, you know, compared to the other indices, it's not as good, obviously, but we're not down here. You know, we didn't break this low. We didn't even break these lows. And we had a good day on Friday, which took back most of what it lost on Wednesday and Thursday. Pretty healthy, I'd say. Let's look at IWM, because this right now is kind of my favorite index. Look at this double bottom. So we've got a recent double bottom here, and, you know, really, if we go back farther, we go back to June, a nice triple bottom. And we come off of that, we had a little bit of a pullback to test, you know, and then we went up. Now we have now confirmed, we've made, you know, higher highs here. We have confirmed this this higher low. And you know, we're on our way up, and we went through some resistance. We came back, we tested it. You know, we've got 3 lows right down in this area, and we've moved up and made this higher high. You know, broke those highs on Friday. This index is outperforming the SPY and the Qs. Let's look at a relative strength chart on this. So this is IWM compared to QQQ, the NASDAQ 100. And you can see that really since about February, IWM, the Russell 2000 small caps, has been outperforming the NASDAQ. And you can see that lately that outperformance has become quite dramatic. So obviously, if we're looking for an index to be in, it's going to be IWM, the Russell 2000. And if we dig a little deeper at this, okay. So sure, all right. So let's say we want to have some exposure to the Russell 2000. Well, is there an area within the Russell 2000 that's doing better than the other indices? And I can tell you that there is an area. And one of the reasons the Dow is doing so well is because the Dow is loaded with large cap value stocks. So knowing that, and they've had a really good run, and I think that it's time for them to take a break. But you know what has lagged a little bit, or small cap value has lagged large cap value. But if the bottom is in this market, and I do now think it is, there's so many signs that we've put in, I think, the bottom. I'm going out on a bit of a limb here saying that. There's still plenty of risk, don't get me wrong. Lots of risk still in this market. But I'm really starting to become confident that the bottom is in. So I want to increase my exposure now. So I was looking at, there's a couple of things I'm looking at. But one of the things I'm looking at is small cap value. So it's a little bit more of a conservative play, right? It's a bit of a safety play. And I think that there is going to be a segment of the investing population that will re-enter the market, will deploy some of their cash, but they want to be safe about it. And they will be looking to value stocks to do that. So I think we will continue to see some outperformance from small cap value. So let's take a look at that. One of the ETFs that does this is the iShares Small Cap 600 Value ETF. So let's compare that to IWM, and you can see even before I pull it up on the bottom chart, right? You can see that it's starting to move up quite steeply and steeper than IWM itself. So let's IJS divided by IWM. And when we look at the bottom chart here, we can see that this has been outperforming even IWM, especially from November through to May, outperforming IWM. Now, from May until quite recently, it had underperformed. And it is now starting to turn back up again and outperform again. And I think this is a trend that continues for a while. So I have taken a position in this in my long-term portfolio, because this is a swing trade I think I'm going to be hanging on to for a bit. Let's pull up a chart of that. I mean, the chart isn't much to look at really. You can see that, you can see this movement here. It actually looks maybe a little more like the Dow than the Russell 2000. But yeah, I mean, it's had a nice move. It's I got in towards the beginning of the week, so I've got to participate in some of this move over the last week, which is great. This is hard to get into right now, I would say. I think maybe you need to wait for a bit of a setup, but you also don't want to sleep on this. There's another one of these as well. It's VBR. This is a Vanguard product. It has underperformed IJS a little bit, but that, maybe that means it's going to play catch up here. And maybe this will give us a good setup too. So these are two stocks to look at if you want to play in that small cap value space, which is kind of, value is leading the market right now. So another way to play this, and another way I'm playing IWM, is with TNA. TNA is a triple leveraged IWM, so it tracks the IWM index or ETF, and it's triple leveraged. Now, normally I don't like getting in these things to hold for even intermediate to long term. However, I've taken a little taster position in this in my long term account. Because I can juice my returns. I think there is asymmetric risk reward here. One of the reasons I don't like holding these triple leveraged ETFs for a long period of time is that the management expense ratio is high compared to like a regular ETF. For instance, IWM, I think the management expense ratio on that is 0.2%. Per year, but in TNA it's just over 1% per year. So that's a little expensive. Also, the way they lever it up, you do get a bit of natural decay. So it will underperform. It will not perform like 3 times IWM. There'll be a little underperformance there. But this is a way to juice returns. And like I said, I'm taking a small position in this, and it allows me to save some of the cash in my long-term portfolio for individual stocks. So I think this, for now anyway, this has good risk reward for me. This is all my personal opinions. This is not investment advice. This is what's working for me right now. And if this stops working, I'm going to be out of here in no time. I have no problem ditching this thing. Okay, it needs to perform or I'm gone. Because being triple leveraged, obviously, it can start losing quickly if it starts moving to the downside. So that's just a couple of different ways you can play if you're so inclined to play IWM. And you'll see in a minute another reason why you might want to play that. Let's take a look at VIX. VIX is doing exactly what we want it to do, right? We talked about how this last week, this had broken down through this trend line. That's beautiful. It had broken down through the 21-day moving average. Now we're starting to crash through support levels, and we're crashing through the 50-day moving average, the 200-day moving average, the 100-day. It's below all of its moving averages now. This is fantastic. This is what we want to see if we want this market to rally. Now, do we come into, there could be a little bit, I should draw this line in actually, because there could be a little bit of support right there, and we might be coming into that right now. So that is going to be right about at that level. And, look where we stopped on Friday. It'd be nice to see this on Monday, break through this support level too. Yeah, pretty happy with the action of the VIX here. Let's take a look at our 10-year yield. We mentioned how that has been now rolling over, and it is rolling over quite nicely. It's got like the beginning of a bit of a downtrend here, although momentum slowed, and it looks like there is some support. Let's zoom in a little more here. A little bit of support here at the 21-day moving average. Do not want to see this start to move up again. But remember, we've got the FOMC this week, so there's probably going to be some volatility, and this is as bond traders sort of jockey for position going into the FOMC meeting. Let's take a look at our dollar index, which has also been behaving fairly well. Now, this moved up a little bit late in the week, but not too bad, right? I mean, this did have a big move down. Came into that trend line. We should expect, as much as we don't want to see this trend line support, we should expect this to support. And there's a little support level here that it broke through and reversed back up. If this were a stock, I'd be pretty bullish on it from that alone. But I'd also be saying it needs to prove itself and move up. And, so this dollar index needs to do the same. We don't want this to move up. It'd be good for everything if this continued to roll over and move to the downside. All right. What else do we want to look at? Let's take a quick look at some breadth. This is the percentage of U.S. listed stocks above the 50-day moving average. We had, if you remember, we've looked at this occasionally, and I mentioned how when we get down into this 10% area here, that's a very extreme reading, and we expect that to move up. We are now at 55%. These are levels we haven't seen since since August, right? So this is good. This is nice and strong. We're definitely trending up on this indicator. Again, exactly what we want to see if we want this market to rally. All right, let's take a look at our dollar cost averaging system. Now, this is the SPY. This has not quite turned green yet. However, look at price has crossed that 20-week moving average, and the MACD is about to cross up. So, all things being equal, I would be shocked if by next weekend this system has not turned green on the S&P 500. So if you're so inclined, you could start front running this, and that might not be a bad idea to start moving back into your DCA. You might want to wait until after the FOMC and make sure they don't shock us with some sort of bad news or super hawkishness. But nobody could blame you for front running this signal right now. The Qs, bit of a different story, of course, because as you know, the Qs are being weak, but this MACD is about to cross over, and we're not that far from its 200-week moving average. And now if we go to IWM, and you will see why I've been nibbling on IWM this week. This on Friday at the close of the week, this signaled green now. All systems go for the IWM. The MACD has crossed above its signal line, and price has crossed the 200-week moving, or the 20-week moving average. So this is good to see. It's nice to see this system turn back on, and that is why I am nibbling so far in IWM, and adding into some of the other indices that I hold. All right, where should we go next? Let's take a look at gold. Nothing really going on in gold. I'm kind of debating if I should even be watching this. Does anybody care if we stop looking at gold? Because it really doesn't do much. We're just going sideways in here. The gold miners aren't really doing anything right now. Maybe they've got a bit of an uptrend, or maybe they're forming a bit of an ascending triangle, but nothing exciting really there. Silver futures, not much going on in these. Copper, copper I think we do need to watch, because it is such an industrial metal, and it gives us hints about how the economy is doing. So it is well worth watching, even when it's just going sideways and doing nothing. DBC, our commodities ETF. A little bit of a grind here, not much going on, a little up and down. That will probably change after the FOMC. DBA, our agricultural commodities ETF, you can see that continued to break down. It broke support there. The fallout of the channel, the upward channel this had, is kind of fulfilling its destiny, and it may not come all the way down to this pivot, and I actually don't think it will now. There's been an event over the weekend that's probably going to see this ETF and some of its components start to move to the upside. That event is that apparently Russia is pulling out of the deal with the UN to allow grain shipments out of the Ukraine. Apparently grain shipments are going to stop, so that should see grain prices, and especially wheat, will probably gap up on Monday, and will probably continue to rise. It's almost, this is a bit of a reversal candle here that we saw. We had the big gap down and go lower and then reverse on Friday. It's as if somebody knew something was going on. Do you think Putin might have been in here buying these lows am buying this up on, or maybe not this, but when we look at the wheat ETF, but yeah, somebody knew something, I think, and was starting to buy up some of these commodities. So let's take a look at the wheat ETF, WEAT. So this has been, grinding sideways for quite a while now. Not a lot of action in here, and you can see in the very recent past we've got a bit of a descending wedge. Now those descending wedges, we expect to see those break out to the upside. And if this news is actually true, then I'm pretty sure this will be gapping up quite a bit on Monday, and probably over the next number of days, maybe even weeks, continuing to the upside, at least into this 950 area, and testing that resistance up there. So this is one way to play. This news coming out of Russia and Ukraine with these wheat exports, or grain exports actually. Corn is another one that could be affected by this, and there's the soybeans as well. Soybeans as well, but I think the main play is going to be wheat. But you can see all of these have been going sideways for a while, so it might be worth keeping an eye on some of these. All right, let's move on. Let's go to oil. All right, we've been watching this head and shoulders bottom. We have been moving up in the right shoulder now. Lost a little bit of momentum over the last couple of days. No big deal. We came into resistance here. Doesn't concern me yet. I do continue to believe that this will continue higher. If we look at natural gas, this is still very volatile. Weather in Europe has been really good, and they're they've got a lot of gas in storage, and they're starting to have some storage issues. And on, I believe it was Thursday, their next hour futures, it's really weird that you can buy futures there for the next hour, actually went negative. But it was only that one very specialized kind of contract, and it was because there was a bit of an issue with a storage facility and they couldn't get gas into that facility, but that only lasted for an hour. But that did cause a big move down here on Thursday. And but you can see we moved right back up again on Friday. I suspect this will slowly grind higher. Let's take a look at XLE, the energy companies ETF, and you can see, this has been so strong. We've lost a little bit of momentum the last couple of days. That's fine. This has had such a big move. It's allowed to take a little bit of a rest and go sideways for a bit. I'm not concerned. I have a position here, as everybody knows. I have a position in this particular ETF and a number of energy companies. I'm not at all concerned about them just yet, or about this. A little bit of pullback would be fine. Now, the only thing is, though, that if you're in any of these plays, you've got to be aware these plays are crowded, right? This has been the outperforming sector. They're crowded. When this does roll over, it's probably going to roll over really quickly. That being said, kind of like it did here, right? Or here. But that being said, we're coming into winter now. We've got the midterm elections next week, week after this week. Expectations are that the Biden will start refilling the SPR. He really needs to do that. They've been pulling way too much oil out of the SPR. They've got to refill it at some point. Obviously, they're not going to do it before the midterm elections, but they will start doing it after the midterm elections because it has to be done. And also, we're coming into winter now. We're coming into the coldest part of the year, and so for the next 3-4 months, we're going to be drawing down a lot of oil, a lot of gas. So that should increase prices here. So I'm still long-term bullish on oil and gas. The XOP, Oil Exploration and Production Companies, not quite as good as XLE. and come into a little bit of resistance in this area and taking a bit of a break. Again, this is totally fine. If this goes sideways for a week, I'm fine with that. And I have a position in this one as well. OIH, I do not unfortunately have a position in OIH. There's only so many of these you can get into, right? But this would have been a nice one. I should have actually, probably bought bought some on this breakout or anyway. Again, really big move, pulling back a little bit. That's totally fine. This has moved so far, it needs to go sideways. MRO, Marathon Oil, is a fairly new position because we were playing the breakout of this bull flag. Now you can see over the last couple of days or last few days, this is kind of underperformed. This one, because it's a new position, because it's got earnings coming up on Wednesday after the close, this is on a very tight leash, and you can see where my stop is, right below the low of on Friday. Now I'm going to be managing. I do not have a stop in the market. This is not a hard stop. I'm going to be managing the position. If it does come down lower on Monday, I'll be watching this. But if it's coming down quickly into this level, then yeah, I'll probably just get out immediately. But if it slows down, if it looks like the low on from Friday will support, I'll give it a little leeway, a little room to move down. But this hasn't gone up enough. There's not enough profit in here for me to even consider holding a small piece over earnings. Now, if we move up, if we go green on this on Monday and continue to move up into this resistance level here, what I'll probably do is, as we come into this 3240 area, this resistance line, I'll probably sell half the position because we've got earnings coming up, and then hang on to half of it. But I need to see a bigger gain in this, for me to consider holding even a small part of it over earnings. All right, let's look at TAN, the solars. They've had a bit of a rough time, but they had a nice bounce, nice reversal candle here, that hammer candle, moved up, come into some resistance, right? And it looks like now we're sort of consolidating between the gaps. That's just fine. We've got that 200-day moving average overhead, and we've got the 21-day moving average below. If we consolidate in there for another few days, totally cool, and then watch for a breakout. For solar, after breaking, making a nice sideways channel and then breaking to the downside of that, has now turned and moved back up into the channel. I suspect this will want to go sideways for a while before breaking out of there. End phase is one that we've also been watching closely. It had that head and shoulders top, fulfilled its destiny there, pretty much came close enough to the target to be good enough, and now we're back into that range again. So same idea, right? Let's look for a setup in here if we want to play this. This, you could almost play this candle, right? It's a hammer candle. It's in an uptrend though, right? It's in a short-term uptrend. But there could be a sort of, you can define your risk in here really quite well, can't you? You could use the low of that hammer candle. You could use the low of the day before that. But I think it'd be better if this went up and consolidated under that resistance level and went sideways under there for a week and then broke out. I think that would be a better play than what we're seeing right here. But to each his own. If you like the look of that setup and you like the risk, how risk is defined on that, go for it. Let's look at consumer discretionary. Okay, you can see we talked about how this last week was starting to set up a bit of an uptrend. Or that might have was that during Ticker Talk? I can't remember if it was last weekend or during Ticker Talk during the week. But we drew in this trend line, and you can see we now have a third touch on that. We came down to that trend line after a move up and bounced right back up again. Very healthy price action there. Trend is nicely intact. We should expect to see this go higher. Let's look at our industrials. Industrials are now one of the strongest sectors. And you can see that we drew in that trend line last weekend. And look how we're moving away from the trend line. We're moving away from that 21-day moving average that it went through quite recently. It's also gone through the 100-day and 50-day moving average. And it's now about to attack the 200-day moving average. Yeah, this is good news here, although you've got to wonder, is this getting a little too stretched? Does this need to kind of like take a break and go sideways? Look at the price action back over here in July and August. That might give us clues to what's going to happen. Because when this did get stretched, it went sideways for a bit, and it did break out to the upside again. So that's something we want to watch for, and we really want to watch out in this area. We're going to probably come into some major support from here. I should probably just rough that in here right now, but should probably tighten that up. I'll look back on the chart later and tighten that up a little bit. Financials. Also moving nicely, quite strong over the last couple of weeks. Probably coming into a bit of resistance, but this trend is totally intact, right? Higher highs, higher lows. Things are looking good here for financials. Let's look at technology. Technology is even looking pretty good. And when you consider the earnings that we had over the past week, remember I said if you watch these earnings come out, it was a slow motion train wreck. But when you look at this index, it's not really what we see, is it? Now we did kind of break through, that initial trend line, but we've gone right back up into it. We do need to adjust this trend line though. So let's move that up into here. We'll get that low there. Still a pretty decent looking trend, right? And look, we closed above the 50-day moving average for the first time since we broke down in late August. So this is really nice to see here. Again, beginnings of an uptrend, but this is nice bottoming action here. Okay, let's look at the communications sector. Now this one is quite weak. However, and because of Meta and Google. However, we did not break down through that low. That's the CPI day. We didn't even break down through these lows here. So with everything that happened to stocks in this sector, that it managed to hold this, I think you've got to be bullish on that. Now, I don't think it's going to continue to go up as quickly as it did. And the same goes for the Qs, actually. I don't think they go up as quickly as they did on Friday. I think there was initial rush of buying in those FAANG stocks, and I think that slows. I think that sector is. It's got some issues. There are headwinds there for sure, and I think that money is going to flow into other places that will move up quicker. Those stocks, those FAANG stocks, will probably grind up, but I think it's going to be a while before they start seeing any really big sustained inflows. I think there's more sideways action for many months to come. In those stocks. So let's take a look at some of these. We'll start with the complete disaster, which would be Meta. Ginormous gap down. What was it? 25% or something like that on their earnings. A little surprising. I mean, everybody was so negative on this. You'd think everybody would have already sold, but apparently not. Now. Is this a bottom here? Maybe. Could it go lower? Yeah, it could go lower. If it does, where does it go to? It could come all the way down in this 78, 80 area if it loses this support. I would not expect a V bottom out of this. I think your best case scenario on this. Let's get rid of that. What's that doing there? Best case scenario on this goes sideways for a while. And between this sort of 98 and say 115 area, I think many months, if not a year or two, of going sideways on this. I don't think anybody's going to be in a big hurry to move into this, because it's clear now that Facebook is going to need a second act. And what is that, or not Facebook, Meta, what is that second act going to be? Is it going to be the metaverse? Kind of not looking like it, right? But maybe. Is it going to be something else? I mean, there's a lot of smart people in this company. Is Zuck a one-trick pony? I kind of like to think so, but there's so many smart people there that they'll come up with something and eventually resurrect this company. But the Facebook portion of this, I don't know. I think it's it's seen better days, and I don't think Facebook itself is really going to come back to its glory days. It's going to have to be something new. They're going to have to pull something out of a hat here. So for me, this is totally hands off as an investment. For now, because I think there's, we are down in this area for a year or two. All right, next one, Apple. Happier news. Apple got hit by, all the other tech news, and it had a bad couple of days, but then once earnings came out, it went down initially if you were watching in the after hours, but then it started moving up. So this is great. What a day on Friday, right? Now, it did come into resistance, and it did come into the 200-day moving average, and it just got rejected there. So we should expect maybe some consolidation, some sideways moving here for a few days before breaking out to the upside. But I do believe that Apple is going higher from here. Amazon, another bit of a weak link. However, when we're looking at these charts, right, we're seeing stuff. We're seeing stuff that's bullish. It's like, I kept on saying, if you're watching the earnings, it was just a disaster. But then when you look at the price action here, you've got to be impressed with this. Okay, so we had this massive gap down. We broke through important support, right? The support going back to May and June. Broke through that, and we turned around, and we came back up, and we closed above it. That's bullish. That is really positive price action. I think this 101 low, this low back here, is going to hold. Now, we may not go rushing up here. It may be a while before we fill this gap. In fact, I should probably draw in what's left of that gap. So that initial gap was, huge like that, right? Well, it's already closed off some of it. So still a big gap, but and no reason not to believe that this isn't going to fill this. But I think that you should again expect some sideways price action in this. This company also has some work to do. I don't think there's any reason to be rushing into Amazon. Netflix lost a bit of momentum over the last few days, but when you consider what's going on with all the rest of the tech, that Netflix only pulled back a little tiny bit and put in these little doji candles, that's pretty bullish. And this is, potentially giving you a little setup here. For me, I will not be taking this little bit of a bull flag. Let's tighten that up to there. There we go. I don't want to play in this because I think that the good move here, the really nice risk reward has passed us by in this. But you can still make some money in here. Maybe there's a nice little scalp in here. And I shouldn't say I won't play this, because I might actually as a scalp. Having a really, really tight leash on this, because we're looking at strong resistance up here at the top of this gap. So where are we now? So our breakout level on this flag is going to be around 302, and we're looking at a move up to around 330. So about 10%. Not bad, and it would probably do that in a couple of days. So that may be worth playing for a really quick little swing trade. Let's see, Google. Another one with really disappointing earnings, put in a giant gap, fell out of its consolidation range, broke below that pivot, spent a day below there, and then on Friday it moved back right up into it. So that's good to see. Let's get this gap in here though, because we haven't even filled that yet. And I guess we have closed off this gap. So where's that gap come from? Oh yeah, we go way back on that one. So that's been totally filled in now. So let's get that off the chart to clean things up. Okay. So here's what we're looking at on Google. Need to see it stay within this previous consolidation. And again, I think it might be another one that goes sideways for many months to come, because I think that money's going to be moving into other areas of this market. There will be money moving into these FAANG stocks, but not enough to really kind of make it break out, and in my opinion anyway, make it worth playing for now. Microsoft. Same idea here, right? Disappointing earnings. Came down, broke through some pivot levels and support levels, and then immediately rebounded, or at least did on Friday. But again, with all this bad news that came into this, with their terrible earnings, or their disappointing earnings, I should say, we did not even come close to this low, and now appears to be turning around. So pretty interesting. Let's adjust this gap. That gap was filled. Let's move, come on. Let's see if we can move that to there. And this comes down to here, I guess. Yeah. Good. Okay, so that was the gap left from earnings. And you can see we've moved into that gap quite nicely now. All right, Tesla. Okay, so the Twitter saga seems to be behind Tesla and Elon now. I mean, Elon owns Twitter, and it would appear that he doesn't have to sell any more Tesla stock for this purchase. So that's good to see. So that should help Tesla put the bottom in here right at this important support level that we had been watching. So I think we need to be less concerned about Tesla breaking down through this 206 level and testing this 186 level. I think we can expect to see some bottoming action, and we've put in some nice reversal candles here. Nice reversal candle there as we cut through that support level and immediately went back up, followed by a few up days, and then on Friday we've got this nice hammer candle. But we do have that 21-day moving average overhead that acted as support, as resistance on Thursday. So we want to make sure we move up through that. Move up into the 250 area, that old gap that was filled. Actually, let's get rid of that one and draw in this gap, because this is probably going to come into play as well. It's going to definitely make this resistance stronger. So let's see Tesla move up into here and go sideways before attacking this. But this is probably weeks away from happening, right? I think it's going to be a bit of a grind for Tesla. But yeah, I'm definitely much less bearish on Tesla. I was getting pretty bearish as it was coming into this area, and again when it retested it here. But things are looking a little better. Things are looking up there. Semiconductors. Things are actually looking up a little bit here. Still pretty weak though. But with everything that's gone on in the tech sector, over the last week, this has held up nicely. So we've been consolidating sideways. I think we can expect another move up, but there's just so much resistance overhead. I wouldn't expect this to go anywhere quickly. AMD has earnings coming. Let's take a look at that, and you can see, you know, nice consolidations base on base. I think. Who was it? Was it Jerry or NS? Somebody in the Discord pointed out this base on base it was forming, and we were starting to look at this, and then of course, you know, we're looking at earnings coming. Earnings I think are on Tuesday on this one. Yes, this would be Tuesday for earnings on this. But this is a nice setup for this to catapult out of this on a decent earnings report, right? So let's get these bases drawn in here, because we're going to be looking at this again in Ticker Talk on Wednesday. And we'll probably be looking at this again over the weekend. So here, you know, we've got a base here, and then we have another base on top of that base. And yeah, this is going to make probably a big move on this earnings. Now, I'm not going to play, even though this is a decent setup for a move to the upside, no way I want to touch this before earnings. But we will watch. You know, maybe it'll give us a chance to get in right after earnings. Okay. XLV Healthcare. Really nice move here. Another strong sector. Coming into resistance though. But that might give us a way to play this. Because, you know, if it sets up a consolidation in here, up in this area for, say, a week or so, a breakout of that, totally playable. So, you know, I'll be keeping my eyes on this one. Biotech. Biotech has got, you know, this little slight upward channel here. It looked pretty healthy coming off of that. I actually bought XBI's brother, sister, whatever you want to call it, which is IBB. I bought some of that during the week, at the beginning of the week, because it looks healthier than this one. That one is IBB. We should take a look at that as well. And I like what's happening here. So I bought this when I bought this in here. Just when it broke through the 50-day moving average, I just kind of like the look at it. I like the way that it was outperforming XBI, and I like the way that healthcare is doing well. I think we're going to see more upside on this, and we're going to be watching this resistance level here and around 135, of course. I should draw that in for you guys. That's right about, say, there. That is the next level that we'll be watching out for. If in my position, if it starts to lose momentum coming into there, I'll probably take off some of the position and wait. If it goes sideways and consolidates, I would definitely add that back in on a breakout and probably plus some as well. But if we just come into here and we consolidate nice and tight, I probably won't take anything off, but I will add to it on a breakout. REITs. These are showing some strength now coming off these lows, so that's good to see. I mean, all of the sectors are performing quite well. You know, they're looking good coming off of these lows, and they're all putting in bottoming patterns, and they're all starting to put starting to put in uptrends early on these, but definitely, you know, the beginning of an uptrend here. We've got higher highs and higher lows. XLP, Staples, really strong off this rounding bottom. Came into resistance and went through it on Friday. But you know, this has had a big move. Wouldn't be surprised to see this go sideways for a bit, especially, you know, with the 200-day moving average there. Utilities. Utilities have had a strong move off the lows here. So they are at the beginning of an uptrend. So we'll be watching for that. So as you can see, the market is behaving very well off the lows. And this is why I think, this time, because there's broad participation this time. And that's why I think this time might be the bottom. This might be the end of the bear market. We might have seen the end of the bear market, or we might have seen the lows in this bear market. And with midterm elections coming up soon, we're just seasonally, this is usually a very strong period. After midterms is usually really strong. It looks like the Democrats are going to lose their sweep. The Senate's kind of up in the air. It really looks like they're losing a lot of seats in the House. And markets like a sort of a divided government. Market likes a government with gridlock. So, it looks like we're heading to that. So I think that we could see, if that's what happens at the election, the day after the election, probably big gap up. And another strong leg higher in the markets. So, that's kind of what I'm preparing for, right? I'm looking for opportunities. One of the opportunities we looked at during the week is Take-Two Interactive, this gaming software company, but they've got earnings coming up week after next. It's a nice consolidation bear flag here. But we're starting to get too close to earnings to be playing a breakout from that. But I think it should be watched, especially on earnings, and see if it gives you something to play, because I think this could break out of this much longer multi-month base here, and move higher and out of this. Let's see. We looked at wheat. GOGO. Here's another setup. Okay. This unfortunately has earnings coming fairly soon. So the earnings, I believe, Wednesday. But you can see this bull flag right here. Nice consolidation. I think this, put this on your watch list. If this goes up on earnings, if there's a small gap up and it continues to go, then you can definitely play that. You could even play it to the downside. I mean, if earnings suck, right, and it starts to fall. This is just a nice setup for playing either way. But again, don't want to be touching this until we've seen earnings. Robinhood, another one with earnings coming, but has a nice setup. Now, I mentioned this a few weeks ago. Mentioned this rounding bottom that's set up here, and look at now we've set up a little bit of an ascending triangle in here. We've got a series of higher lows, but we have not been able to put in higher high yet. But these ascending triangles, we expect to see them break out to the upside. When is earnings? Earnings on this one are Tuesday, Wednesday as well. So I want to watch this because it's just such a beautiful setup. If the market likes their earnings, I think I want to be jumping in this. Because this is a big breakout about to happen here. So again, another one worth watching. But that is it for the setups. Unfortunately, we're right in the middle of earnings season, and we've got lots of good setups, but they've all got earnings coming. So there you go. Okay, what next? Let's look at this. All right, so that is the end of our market update for the weekend. Thanks for watching, everybody. If you're watching the recording, go ahead and hit that like button, share with your friends, subscribe. Everything helps out here. And we will see you on Wednesday for the next Ticker Talk. Have a great night, everybody, and enjoy the rest of your weekend.